Hey all, Tom Weller here from forexreviews.info. This is part 7 of the Price Action Traders Mindset series. And in this series we'll be going over basic patterns, in particular the channel. Okay, now there are 3 basic patterns that probably you guys are already aware of. There's the channel, there's a pattern called the pendant, and there's a pattern called the wedge. There's also a pattern that some people call a triangle. Okay, what I'm going to show you in particular here though is a pattern that I like to see in the forex market, a pattern that I like, and that's a pattern that pattern's called the channel. Right, now these form on a daily basis and they're great for intraday trading, just like for short-term trading. You don't have to use them for long-term or anything like that. They're really great for like getting bias on like the lower than the 1 hour time frame. And like I said, they form on a daily basis. And this is how a lot of intraday traders trade. Is they'll look for these particular type of patterns and then they'll trade them depending on what the pattern's telling them. And like I said, these can form on a regular basis on the 1 hour or anything below. Even the 15 minute they form all the time. And they're just a way of letting the trader know what's possibly going to happen in the market in the future. So anyway, let's start in the Euro US here. And yeah, before I begin though, I want to say that they do form on all time frames. Okay, you commonly get channels on the weekly, on the daily, on the 4 hour. However, they're just not going to form every day. Okay. However, on the 1 hour or lower time frame, which is what we're going to go over some examples here in this video, they form on a daily basis. Okay, and literally, usually, a chart will go from one pattern to another, and that's very common. All right, so let's get into this. Let's start in the Euro US, one of most people's favorite, and we'll just have a look at some recent moves just to show you what I'm talking about. Okay, so here's an example of a recent channel right here. If you see that, price came down, price bounced up, bounced down, giving the ability for the trader to be able to draw a channel. Then it bounced back up and gave an actual official channel drawing, and then the price came down and actually broke through. So this really wasn't a confirmed channel. Almost. And then would have given the trader a nice opportunity around here, but then it broke through. Right? I suppose this probably would have been the only opportunity you could have taken on this pair. I mean, this channel. Right here. Okay? As you can see, boom, 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 a bit of bearish price action, and price went down. Now, I'll zoom in a little bit. I don't know if we'll be able to see these channels as clearly. Yeah, that's okay. All right. And that's the other thing too. To sometimes see these patterns such as channels or pendants or diamonds or whatever you want to call them. Sometimes it's best you can zoom right out in the chart, and they sort of pop out at you once you start looking for them. Okay, so here's a second example on the Euro US. Just a recent move. We don't want to look at any far in the past. We'll have a look at a few pairs just to show you what I'm talking about. So here's the trade. All right. Now, if you're wondering where, if you're trading these sort of patterns, where do you place your stop? Well, that's quite simple as well. You can just place it on the outside of the channel. If the previous low is close, you can place it below that low as well. But it does allow for, in some instances, extremely tight stop losses when it works. Okay, so, and then this is the other thing too, right? Because these